Hello traders, and thanks for tuning in to Exness's Market Outlook. In this video, we're looking at potential idea for a trade over the next few days, the narratives that might drive the position, and what traders taking it would need to monitor from the economic calendar and news. But before that, let's look back at the performance of last week's idea. Last week, the idea was to buy the Australian dollar against the yen from around 91 with a potential target around 92 to 93. The idea was triggered and was accurate. Now, for this week's idea, I'm Michael Stark, Financial Content Manager, and joining me is Andreas Themistocleus, Trading Specialist. Thank you for joining us, Andreas.
Hello, Michael, and thanks for having me.
So what's the idea for a potential trade this week, Andreas?
So my attention for this week is shifted on the gold chart for a potential long position around the 2000 price area after some possible correction around the 1950 area. The price has been driven down by a strengthening dollar and is currently showing signs of correcting to the upside. And that's what we are going to be checking out today.
And what do you think are some of the main narratives that are driving the movement by gold, debt ceiling or anything else?
So firstly, we have the narrative of the debt ceiling in the States. The fear of recession is sparking up after we don't see any developments on reaching an agreement between the Congress and the government on raising the debt ceiling. The supposed deadline is coming up on early June, where if we don't see any developments on the public debt issue, we might see the government defaulting on the public debt, and that will impact negatively the dollar against its pairs.
And can you give us a quick rundown of the data coming up this week, mainly on Friday?
Okay, so firstly, we have the narrative of a recession in the States intensifying once again, as the discussions about raising the debt ceiling have not yet come to an agreement, with the deadline approaching early next month. There is a high probability of the US defaulting on their debt, which could negatively affect the US dollar against its pairs if the government fails to come up with a solution to the public debt issue. This pushes investors towards the yellow metal, which is seen as a safe haven in economic turbulence. If we take a look at the chart, we will see that the 1950 price area is a very strong support level because it consists of the lower band of the Bollinger Bands and also the 100-day moving average. The stochastic oscillator is near the extreme oversold area, indicating that a correction to the upside might be possible in the coming sessions. The 2000 level area is not just the psychological resistance of the round number, but is also the combination of the 50-day moving average and the 20-day moving average.
And can you give us a brief summary of what's the important data coming up this week on Friday and the rest?
So in terms of economic data for this week, we have the US PCE, core PCE publication coming up on Friday. The market is not expecting any major changes, but in the event that we see a lower reading than the expectations, we might see some losses created for the dollar, at least in the short term. Apart from this, nothing else major coming up this week, but the attention is mainly shifted on the debt ceiling, raising the debt ceiling in the States, which is the main narrative in the markets right now, because in the event that we don't see any material developments in the coming days, we might see some push downwards on the dollar and its pairs.
Thank you, Andreas. So, in summary, the idea for a potential trade this week is to buy gold from around 1,950 with a possible target at around $2,000. The primary narrative behind that position is ongoing negotiation about the USA's debt ceiling, and the critical data to be watching this week is personal consumption expenditures and consumer data from the USA on Friday. Please remember that this is just an idea for a trade. It's not a signal, it's not a guarantee of success. Do your own research and manage risk.